Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP Invest. Like every Friday, we are here after the market is ended to discuss what price activity happened in the market and what that tells us about the weeks to come. Now, this week has been extremely interesting. We had some very one-off events happening. One was the attempted assassination on Donald Trump in US, and the other today that we experienced, because of which a lot of global major services experienced outage. Thankfully, not our Indian stock market, but globally, a lot of other stock markets did. That was the issues, you can say, with Azure. This has not had a significant impact in the Indian market today, but it is expected to have impact because it disturbs the sentimentality of market participants. However, without letting these external, I like to call them jitters, impact our objectivity, let's go and take a look at the price action, because at the end of the day, we need to understand that when we look externally, there are lots of events that are always happening that always affect or try to affect our psyche with respect to the market. But the stronger you can be and the more focused you can stay on just the price activity, the better results you're going to get. So with that, let's move forward with the 3-minute time frame of Nifty. And before I take you to the charts, I'll just tell you about the structure that this session is going to take. I will spend around 20-25 minutes discussing Nifty, various time frames, Bank Nifty, and the intersector charts. Then we will move on to your stock queries. We have some participants with us on Zoom who have registered for this session or are premium members of my services. So we'll prioritize their queries. And if you have follow-up queries after that, you're more than welcome to fill up the stock request form. If you have time remaining, then we'll take up your queries accordingly. And just on a small note, if you want to be part of the prioritized interactive session, be sure to join my Telegram channel. And next time before the live session, use the registration link to register yourself. So with that, I'm going to share my screen. And here now you can see the 3-minute time frame of Nifty. Now, on this 3-minute time frame of Nifty, what you can see is that this is basically where the entire month of July started. Now, this was the first, I would say, resistance and support that we saw. So 24,000 in the first week of July, 24,400 acted as a very strong resistance, and we saw the price take 3 resistances there. On the downside, 24,175 roughly acted as strong support. Now, as soon as this resistance was breached, a very strong rally unfolded. And that rally went in pretty much one straight line, 600 points within a matter of just 1 week. It went and it crossed 24,700. So 24,700 was my next resistance. Now, 24,400 has become the immediate support. And since 24,700 has been breached, the next resistance is 25,000. Right? On this 3-minute time frame, I can see the price structure is still pretty intact. This little bit of correction that has come, it's around 300 points. Even though the price structure remains intact, a lot of panic has already come. And this panic usually comes because our trading horizon tends to be shorter and shorter, smaller and smaller. And if you've bought positions very close to the high, then you will feel a little bit of a sting of even a small correction in the market. So when you're planning your trades, make sure that you're not doing FOMO trades, or you're not getting into trades out of the fear of missing out rest of the rally, which you're imagining. So if you have a tendency of buying stocks after the rally, then even small corrections are going to feel pretty painful to you. So this correction from the peak of around 24,840 all the way to 300 points, this may feel like a big correction to you, but honestly, it is not a big correction because even the previous low has not been breached yet. Talking about the RSI on the 3-minute time frame, I've hidden the MACD volume. We don't need it, so I don't want it to clutter my chart. With respect to the 3-minute time frames RSI, I would say the structure is pretty strong even now. There was a little bit of violations here when we saw in the earlier days of July that the level 30 was getting breached, but that is not the case anymore. So I think the momentum is still very, very intact in the market. Moving on to the 15-minute time frame. This is the RSI again, and here on the RSI itself, you can see one structural break occurred when the level of 40 was breached on RSI, but this was very momentary. So I'm going to ignore this. Apart from that, as you can see, RSI on the 15-minute time frame has been oscillating between the range of around 70 plus to 40, which is the textbook bull range of the RSI. And I do expect that the market is going to sustain the level of 24,400 and will continue to rally. Moving on to the 75-minute time frame. Here again, if you look at the volume activity, the volume pickup on the upside has been good, and the volume on the downside has not been very, very strong. However, on the 75-minute time frame, little bit of a negative divergence has started to become visible. You take this into consideration, but I wouldn't make too much out of it because the overall price structure continues to remain strong. And in my opinion, as long as the RSI is sustaining above the level of 50 on the 75-minute time frame, in my eyes, it continues to remain pretty bullish. Moving on to the daily time frame. The daily time frame analysis every week doesn't really add a lot of value, doesn't add enough definition, I would say. But one thing that I do want to mention is the fact that the RSI of the daily time frame is now above the level of 60 is very, very bullish. Earlier, if you had seen since January 24 all the way to May 24, the RSI of the daily time frame was oscillating right below the level of 60, which to me was a bit of a sign of danger. And in hindsight, now I know that RSI was only doing that on the daily time frame because after a very strong rally that we had experienced all the way from October 23, the strong rally that we had seen, if you see that rally did not correct. In fact, it corrected in the form of a consolidation, which is a sign of a very, very strong rally unfolding. And here the breakout. So ever since this 4th of June volatility happened, and the fact that the market was able to cross above this high and continue, for me, that was a sign in itself that the market is going to rally all the way to 25,000. And now the market is actually very close to the level of 25,000. And considering the strong signals that we are seeing on 3 minute, 15 minute, 75 minute and daily, I am convinced to stay in the market, of course, with tight stop losses on all my positions and not let small movements like this throw me off. I think it is the external motivations or external news factors and the overhype of certain factors which has actually caused this big red candle today. But I believe that the market will test 25,000 as soon as next week. It can happen as soon as next week. As long as 24,400 remains intact, my view of 25,000 being the next target also remains intact. Now, immediately, I'm not able to give a target bigger than 25,000 because there is a trend line passing through there. So once 25,000 gets tested, then I will observe what the market does and what it looks like, what the momentum looks like, what is the structure. Now, today, what we'll do is on Bank Nifty, I want to take a broad view analysis. So I have removed all the drawings and we'll start with drawing our way from the weekly time frame and work our way downwards. So in order to draw my trend line, I can see that Bank Nifty has been respecting all of these points really, really well. And if you join these points, you get like a 7 or 8 touch point trend line, which is a very, very strong trend line, right? I think it's even more than 8 touch point trend line. So this is like a super strong trend line. And I'm going to use this same trend line to basically clone and place it wherever I see other major peaks and bottoms on the weekly time frame itself. Once I go to the daily time frame is when basically I'll reset the chart and more internal trend lines to get better sense of what is going on. Let's remove these circles because they are just adding a lot of this thing. All right. So here we saw last time, here there was an interaction with this trend line before the correction, major correction happened on bank. Resistance trend line has been breached. So for Bank Nifty, I am expecting that the rest of the rally will also come. So around 5.5% upside is what I am looking out for on Bank Nifty. If you look at the RSI, again, RSI of the daily time frame continues to be pretty bullish. What I am not very convinced with is the volume with which Bank Nifty is heading upward. I wish there was more volume that would add to my conviction. And just before this session, I was also looking at charts of major banking stocks. And I could see resistances a lot closer to the current price action than the support levels, which actually deters me from making fresh positions in banks at the moment. So here I would say a resistance lies somewhere around the level of 55,000. So I'm going to write that level. So 55,000. Now when this comes, I want the alert. So I'm going to set my alert up. Looking back on the price action, so here we saw there was a small negative divergence. This was last week, so we had discussed it. And since then, we've not seen a lot of activity in Bank Nifty. But now that the 20 EMA has acted as strong support, we can expect a little bit more upside to unfold on the charts of Bank Nifty. So this is a pretty important support that we are. If I take a mark on this is around, let's just round it off, 51,900. Let's set the alert on this. So this is a important support. And again, if we clone the same line and place it, this here is another level that we can see. So exactly the level of 50 and set an alert. So these are the 3 important levels that I will be looking out for. Immediate resistance, I would say, is 55,000. Immediate support is 51,900. And support below that is 50,000 on Bank Nifty. 25-minute time frames structure continues to look bullish as long as the RSI sustains itself above the level of 40. Now coming down to the 15-minute time frame, did signal that some correction can come by way of this negative divergence and by way of this structure breach here, right? So this is the tiny little correction which it indicated. And honestly, 15-minute time frame has enough to just give us an indication of what is going to happen maybe 2 weeks down the line, not more than that. So only if you want to focus on very short-term activity, it's better to look at 15 minutes. Otherwise, it doesn't make a lot of sense, right? So 75 and daily time frame is what it's always better to focus on more. So that's the analysis for the Bank Nifty. Upside up to 55,000 is expected, and on Nifty, 25,000 is the resistance that we are expecting. Now let's move on to the indices chart and take a look at performance of various indices. So I've opened this layout where I have added the line chart of CNX 500, and I have added using this button all the other indices that you can see here. So all these tick marks, these are the indices that I have basically sectoral indices that I have added for. So what this shows me is how did all the indices fare. So this has been a pretty volatile week, I would say. However, IT sector has done pretty well. IT and FMCG have done pretty well. So this week we had active recommendations in Infosys, which achieved our target, and we continue to trail our position. And today the results of Infosys also came out, which are pretty good. So the IT sector, I think the rally has just started and is expected to continue. FMCG sector, let's just take a look at the FMCG. So like I said at the beginning of the session, right now a lot of jitteriness has increased in the overall market, because of which we are seeing a little bit of slip in confidence, and as such the FMCG sector is giving a pretty good rally. That being said, the real question is, should you continue to accumulate FMCG sectors at this point? I don't think so. FMCG sector is surely it's defensive and it's a consistently upmoving sector, but it's a very bad idea to buy FMCG stocks near the top. And right now, if you draw a trend line using even these most recent peaks, you will see that the price is very close to the trend line. So if you have active positions in FMCG, it would make sense for you to trail them with stop losses. But at this stage, I would not recommend fresh new positions. Look at IT stocks, they have better opportunities. PSU Bank. Now, for PSU Bank, we will take some examples for PSU Bank and we'll do the analysis there. But I think PSU Bank has a little bit of it's a bit of a mixed bag. There are stocks which are showing some promise, but then you again have to be kind of on the back foot. At least for me personally, this is true. I like to be on the back foot when it comes to PSU banks. The PSC sector on the overall, so PSC sector has not done good. And last week also I had warned you that I'm expecting some correction in the PSC sector. I think PSC sector right now offers more on the downside than on the upside. So if you're trading, especially for the short term, you want to be careful there. Healthcare and pharma sector. So this is the Nifty healthcare index. And what I can see is Nifty healthcare index has been rallying pretty strongly, and the underlying trend continues to be very, very strong. In fact, right now it is taking a very small dip, and I expect that this dip is not going to be the end of the rally. In fact, it's going to continue. So my view on the healthcare sector remains accumulate or buy more, again depending on stock specific analysis. Same goes for the pharma sector as well. Energy sector, I think, is coming out and is readying itself to give a rally. ONGC has given some good moves. IOC, on the other hand, continues to consolidate around its channels. Consumer durable, I don't have a view as such. Metals, I think they can take a little bit more time to start giving rally. Auto sector, so I have some positions in auto sector because I'm expecting another leg of rally to unfold in auto sector. I think the bullish momentum is still pretty intact there. With respect to CNX finance, again, that's a little bit of a mixed bag at this stage, right? So with that, I come to the end of things that I wanted to discuss. If you found what I have shared so far in terms of analysis of Nifty, Bank Nifty, and the sectors useful, please don't forget to subscribe to my YouTube channel. You can search Kavita Agrawal CMT CFA on YouTube if you're watching this on a separate channel, or whichever platform you're watching this on. So don't forget to give this a thumbs up, and don't forget to leave your feedback in the comment. It absolutely makes my day to read your feedbacks after the session. So now let's call upon our Zoom members and see if they have any questions. In the meanwhile, if you have any questions and you'd like me to answer them, please fill up the stock request form. Depending on availability of time, we'll turn to your questions as well. It is a SEBI requirement that any public opinion given on stocks should be kept record of. That is why we've resorted to stock request format. But if you have any other questions related to methodology or a general questions which is non-stock related, that you may. So someone is asking here that should we exit our positions after today's fall? Like I said, if you're like a very, very short-term trader, then your stop losses would have already triggered. I am personally not a very short-term trader. I am a swing trader with a holding period of anywhere between 2 weeks to it can go up to 6 weeks, even 3 months in some cases. So for me, this fall is not significant in any manner. Sure, it did shave off some of my unrealized profits. So let's see. We have Rajat Singh ji on Zoom with us, and he wants levels for VST Industries, and he wants to make a fresh position. Fine. So it's already given like a mass gap up today. But let's start from a longer time frame. So from a longer time frame, what I can see is that fine, even though it has given a big move today, it seems to just be coming out of a consolidation, and it at the same time it has a really strong underlying bull trend as well. The rally here seems to have lost some momentum, but I like the fact that the 250 EMA of the weekly time frame did not get violated here. And the volume activity, if you see on the upside, is pretty strong. But then again, if you want to make a fresh position, I won't recommend you to make a position right here because it is closer to a major resistance than to a major support. So what I would recommend for you, Rajat ji, is instead of buying now, you potential entry at 4286 for a small quantity. I think 4286 is a level that it can easily come down to retest. That would be a better entry point for you than here. On the daily time frame also, if you see a bit of a negative divergence has started to form, which tells me that the stock can come down a little bit, at least to fill up this gap and then carry out. So you want to look out for the resistance of 4880 because it's a major resistance here. And if the stock rallies or crosses above that, then it is something that should be paid attention to. Let's see if there is any news. Bonus issue. Fine, they have a bonus issue plan. So this is a sentimental rally, I would say. I don't trust it. So 4286. So I am also going to set it at 4286 and I'm going to set today's date on the alert, July, so that I also have a memory of what I had said and what happened. You have one more thing. I have PTC Financial PFS at average 48.5. What level? You see, I caution if that level comes. Okay, fine. So PTC India, right? That's financial. So 5 is your average. So you've pretty much bought this like super recently, but the underlying trend I'm seeing is good on the stock. So let's zoom out a little. Not a very trending stock. I would say it's more cyclical in nature. And based on its historical activities, it's very, very close to resistance, but I would expect it to at least retest this previous 3. I would expect it to retest. Now, here, since it has given a breakout above this entire zone, I think this, and it has also come back to retest the very, very first support, which is around the level of 49. I think if this breaks below the level of 44, basically, if it creates a lower low, is when you should be worried about because it has a strong support at the level of 45.5. So it has no reason to break below this level. If it breaks here, then you should be cautious because then. So next we'll move on to Maruti for Sahil Mahajan. And by the way, any of the Zoom participants, if you want to come off mute and ask me a question, feel free to do that. Just raise your hand and we'll. So Maruti is actually looking pretty good to me because underlying trend is strong and stock has fallen down to the 100 EMA, given a strong, shown a positive divergence and now giving a pullback. So I think from a fresh entry perspective, and the 15-minute time frame also has moved back up to the positive range. So I think this is a very good time to make fresh position here in Maruti. And last time that I assessed it, I was expecting a little bit more correction here, but since it has kind of established a new high and on the smaller time frame, this is starting to move up. I think it can continue its broader market rally. So good time to make fresh entry here. Let's take a better look at the trend once. And I can see that the stock has a resistance here. And this is where it started moving up from. Now that it has started to go up, I would expect it to test the upper end of this channel, which is well into the new high territory, I would say. But then again, to be a little bit conservative, that territory, I think 14,500 from a short-term perspective acts as a pretty good resistance, right, for you, Sahil. Yes, Mohit, you've raised your hand. Please tell me.
Hi, Kavita.
Hi, Mohit.
I was looking at HAL, Hindustan Aeronautical Limited.
What divergence have you noticed this? Because on HAL, I'm actually seeing a lot of this one right now. This is a positive divergence, but I would want to see a little bit more structural improvement because this is like a major structure breakdown in the terms that the level of 30 has been breached brutally here. So also when you take a position in a stock, right, you always want to make sure that the stock is looking good, especially on your larger time frames. So what I would say is on the daily time frame, there is a negative divergence. The last leg of rally lacked volume participation. So HAL would not. So let's go back to Maruti. You want to know what should be the stop loss also if you enter at the stop current market price. So I think this breakout that it has given, I think Maruti should not break below this breakout to maintain its price structure integrity. And also compared with respect to the previous price activity, like this makes total sense to be used as a stop loss. But then again, I want to give you a little bit of a bigger stop loss because if the overall market is going to stay, kind of a little disturbed. So 11,960 is what you should observe as your stop loss. And on the upside, I think 14,450 would be a good target, but then be sure to revise your stop loss. So the moment the stock goes above 13,100, you should revise your stop loss. Maruti actually has come back to a pretty attractive level. So I'm going to set an alert here and call it assess. So next day when the market opens, so let's see. So yes, let's remove the old drawings and let's take a fresh look on this stock. So again, another very good trending stock. And if we can assess the resistance, so this seems like a pretty strong resistance line. In fact, the stock is respecting a really strong channel. Currently, it is at the lower end of a good channel. Now, volume activity is not very encouraging, which is okay because downside, and there is clearly positive range shift in weekly, and the RSI is at the support zone. Same goes for the daily, strong positive range shift, and RSI is at the close to the support. Here we could see some 4th of June madness, but the stock hasn't really broken out support zone, which it keeps coming back to. On the 75-minute time frame, it has given a positive divergence here, like a pretty strong positive divergence, and sustained above this blue line, which is a 250. But I still think that your should be done in such a way. So you should set a buy GTT order near the level of 1190 instead of taking an immediate purchase in this, because the price is still not out of the woods. And there is a chance that it can come back to retest this yellow trend line, because if you look at the past price activity, every time it kind of turns up from the yellow lower support channel, it takes multiple tests before unleashing into a rally. So this correction is kind of still a little young. So I would rather have multiple buy GTT orders set here to lower my average cost, like 1190. Another would be at this 250 EMA itself, around 1160, right? And once those get executed, then the question of stop loss comes. So you can't set a stop loss here which is above this peak, because this peak itself is also a very good support zone. So just below that peak is where I would have a potential stop loss. So this is also the reason why I would suggest you work on averaging your cost price lower, because the stop loss from the current market price itself is pretty big. It's around 12-13%, which is not what you want to do. So if you can lower your entry price, that would be great. On the contrary, see, there is no guarantee that the stock is going to go down. It can also go up. Keep an eye on the key resistance. And I think 1315 is a very important resistance level on NH. So if the stock breaks above this, then I will wait for it to pull back to around 1315 to take a fresh entry. But as long as it is not breaking above or sustaining above this, I would expect it to come back, because see, this is a sideways consolidation range which it is kind of following. So unless I have reason to believe the range is broken out, I will believe that the support will get tested again and have my entry opportunity or entry setup done accordingly. Yes, Harsh, let's move on with your query.
My query is regarding the stock Tata Elxsi. I mean, my observation on it is that 25-minute time frame, I'm seeing a positive RSI positive divergence. But on weekly time frame, I'm seeing that there is a unusual ABC correction is happening. So whether is it good to take Tata Elxsi or should I wait?
See, Tata Elxsi is, as a stock itself, is a very tricky stock to trade in. It has a lot of retail participations and it's a strong, fast mover. At the same time, it's not a very large company. So Tata Elxsi is one of the trickier stocks. So you are absolutely correct. There is a positive divergence, something that even I have noticed. But before you take a position in the stock, it's better to wait for some confirmation, because it can give very volatile movements. So I am personally waiting for a higher high, and when the stock goes above the level of 7175, I will take a call on whether I want to go for the stock, like enter it right now or not. Typically, I'm not one to wait for breakouts, but given the nature of the stock, it is important that we wait for a breakout here. It is definitely in correction, and it does look like the wave C is so where it's going to stop unfolding, we can't really say. And if you're looking at the weekly time frame, then you should wait for a higher high above the level of 70. Pleasure. So we'll other members, if you want your queries answered, I request, please. I can see one query on Havels from Akhil, so let's take that. So I don't think Havels is a very good idea to enter immediately, because on the 75-minute time frame, I can see some negative divergence here. And in the last two corrections, it's also broken below the level of 40, which makes me a little bit uncomfortable. So I would expect some more correction on Havels before, suggesting a fresh entry. In fact, today itself, I attempted an entry but got stopped out almost immediately because the stock went into correction. So if you have any long positions, honestly, all legitimate stop loss levels have already been triggered. So stock is officially in correction, and unless it creates a bottom, I would not touch it right now unless it gives me a confirmation. Now let's take a look at the stock request form, and today is the 19th. We have Ashik. He's asked for the analysis of NCC with average cost of 163. So you seem to be a bit of a long-term holder here. And from a long-term perspective, what do we 163, right? So you've already captured a nice rally. Again, not a, so this is a sharp mover, like it goes into one-sided rallies and then one-sided corrections and one-sided rallies and one-sided corrections. So naturally, for any, definitely continue to hold while the stock continues in this upside channel. So this is the channel that you need to look out for, and if this channel breaks down, that is when you should exit. So currently what I can see is the support for the stock lies at the level of 295. So until that happens, you need to hold on. But if the stock breaks that, so your stop loss here would be around the level of 274, which I know is a pretty big shave off. But then this is a kind of stock. So when you deal in stocks that are super trenders like this, unfortunately, you need to give it a lot of breathing room. If you had to be aggressive, then this 315 would have been your stop loss, which is already in the past. But since you're asking for analysis now, clearly you're still holding on to the stock. So KK is also asking for the target of NCC. So like I said, this is a strong trending stock. It's in an upward trending channel. So it's almost impossible for me to say where this upward trend is going to stop, because this just seems to be getting stronger and stronger. Though on the daily time frame, I am seeing a negative divergence. So fresh position is definitely not recommended here. But the volume pickup on the upside that I'm seeing does suggest that if this yellow trend line that I've drawn, right, I'm going to set an alert on that. If this yellow trend line gets tested, basically if the stock comes very close to this green line also, which is the 100 EMA of the daily time frame, it becomes a potential good entry point, and then you can keep playing this whenever it goes up to touch the next. So if you want this trend line, you can simply connect this peak of 27th February and this peak on 10th of. Next, we have a query on TC before and after budget view. I don't know what the budget is going to be, so it's impossible for me to say what budget impact is going to be witnessed on the stock. But I don't think TCS is a good idea for a fresh. So Dixon Technologies for Apurva on fresh entry. I think the underlying trend in Dixon is extremely strong. And currently it is very close to a support at 11,270. That being said, I think the volume pickup on the upside also has been strong, even very recently in the rally. So this dip actually becomes a good excuse to purchase the stock. However, I would recommend a small accumulation strategy here, because the 15-minute time frames price structure has kind of been broken down a little bit, which I am not comfortable with. So just like here we saw a slightly bigger correction, we can expect a slightly bigger correction and maybe a retest of the 100 EMA also. So essentially your buying zone would be this entire area between the level of 11,400 to 9,500. That's a pretty within Dixon is that kind. Let's take a look at Policy Bazaar. So Satvik is asking for Policy Bazaar. So let's take a look at Policy Bazaar, and let's draw a very sharp turnaround to connect my channels. This looks like a nice little channel that is oscillating in. Fresh entry, I am not very excited about fresh entry because small positive negative divergence on daily is visible. And when I take a fresh entry in a stock that's giving a continuous run up, for a potential buy on dip, I want to see better upside volume activity, which I'm not seeing in this stock here. So I think if it came down to the level of around 1290 in this correction, if this correction continues and Policy Bazaar comes down to maybe 1300-ish, there maybe I can make a fresh entry, but not right now, because it is within the channel, and within the channel also it is headed downward, not upward anymore. So I am not comfortable with making a fresh position here. I would wait for it to come down close to the level of view for the next 6 to 12 months on the stock is, well, it is bullish from a long-term perspective. I think you should definitely continue to hold on, and you should also maintain a stop loss near this level of. So we have analysis of coal. Again, Coal India is one of those PSE stocks which have given very good rally, but signs of loss of momentum are evident. So if I were to purchase Coal India, see, Coal India is also a stock which is very actively on my watch list. So I am waiting for a correction to the level of 448 in Coal India to make a fresh entry in. Right. So with that, I can see it's 5:45, and that's when we need to call an end to this session. So we'll wrap up for today. And thank you so much for joining me for this live in Market Outlook. If you found my content useful, please don't forget to give this video a thumbs up, and also don't forget to join my Telegram channel. The link has already been dropped in your comments, or you can just open Telegram and search Trade with Kavita. But mind you, there are lots of fake channels running with very similar names, so you don't want to join anything that's shady and posting a lot about options and cryptos and futures trading and screenshots, profit screenshots. That's not me. That's someone very, very jobless posing as me. Right. Thank you so much for joining. I will see you again on Wednesday in the Let's Get Technical series, where we discuss the technical analysis of any one chart in which we've either taken past trades or where I see something very interesting unfolding from a future